Hey everybody, it's Pete. How's it going today? Welcome to a new episode of today's today's best stock picks, and we're going to combine that with today's stocks for breakfast video. We have a lot of stuff we're going to cover. We're going to do it in a jam-packed moment because what we're going to cover is I'm going to show you two trades that we called out this week for swing trades, and we get a lot of really good feedback from you about, well, you called this trade out, and you called this trade out, and you called this trade out, and here's the spreadsheet for the last 6 months of every trade you called. Today, I'm going to show you the difference between a trade idea and a trade. Big difference between the two. And hopefully, if you spend at least 5 minutes with me right now, you're going to understand what separates somebody from somebody who has ideas, understands order flow, assesses the probability of the trade, and then manages the trade when it hits certain levels with certain position sizing. If you're struggling right now, you're really going to like watching this video because I'm going to walk you through. I'm going to add a third trade. And the third trade actually is a trade we took a loss on, and the stock is getting crushed this morning. How's that for like suspense? But I want to show you exactly how we manage the position because the trade management on the position, and I did a video on this about a week and a half ago. The trade management on the position is probably the biggest thing. We're going to start out with Snap right now, which is opening up at all-time highs after earnings. It's up 16% right now. It's early in the morning, but I think you're going to like. We're going to talk about that too because I'm going to show you how to read the tape in Snap, despite the fact that it's skyrocketing higher to what I'm going to plan on trading the stock, how I'm planning on trading it today, and you could use this every day in your trading. So stick around. I'll be back in just 1 second. Okay, so as we should be discussing every day, everything that we talk about on these videos, especially stock picks, are for educational purposes only. You need to make your own decisions and consult your own financial consultant prior to putting on any trades. So we're going to start out with Snap first, and we're going to go over to the tape, and we're going to watch how it's trading right now and what we plan to do about being long. So we have the weekly chart here, and right now, if we draw a line in the sand, we are at 73 and change. So we're actually all the way up here. We're way, way above, right about there. Give it, you know, let's make it official. We're at 73.23. And you can see that right here down in this corner over here. So what does that mean? What does that mean and how do we plan on trading it? Obviously, if we look to put on a trade right now, the stock is like way up there. And we have the distance between where it closed yesterday and it's literally, we're kind of off the chart, right? So what does that mean for a trade? Well, again, a professional trader first needs to assess the risk, which is how much we're willing to put in harm's way in exchange for how much we believe we could make based on what the stock normally does. So the stock now is up 16%. Stock has not gone up 16%, I don't think, ever in one day. So what do we plan on doing? How do we assess if right now is a good opportunity to trade? So first, I want to make it clear, I'm not looking to initiate a swing trade. I am looking to day trade the stock off the volatility of today's price action. So how do I do that? And we're going to actually use the current price action for the entire week to give you a line in the sand of how we're going to trade Snap today. So we're going to head back over to the screen. You can see we have a weekly chart. We're going to actually drop it down to a daily chart, and this candle right here, we have Monday, Tuesday, Wednesday, Thursday. This candle right here is Monday. So that is the opening price on Monday. So what we're going to assess right now in Snap is we're going to use that same opening price on a intraday chart. So if we're looking at Snap right now, and let's just say for argument's sake that that's where Snap opens today. We know it's going to open up at 73, somewhere around 70, depending on where it is when the market opens. This line in the sand, this tape reading technique, this level that matters to you is the opening price. The opening price is the first trade of the day, and these are 15-minute candles of Snap. So as long as price is above that opening price, which is this line right now, only then will I be looking to buy Snap. I'm not looking to buy weakness in Snap. I'm looking to buy strength and follow through in Snap. So in the first 15 minutes of the day, Snap had some strength, but then immediately started trading below today's opening print. So if that happens to be 73.23, that's where I'm going to be looking. And the reason this is so significant is when we segue into the 3 trades that I'm going to show you, this is the way that I trade. This is the difference between a trade scan, a trade call, and then actually putting a trade on. And position sizing is by far the biggest thing that we're going to talk. I keep doing that. Position sizing is the biggest thing we're going to talk. I'm Italian. I'm from New York. So we're going to go right back over to Snap, and I want to give you the visualization. So from here, throughout this entire part of the day, I was not looking for an entry, or I would not be looking for an entry when the market opens today. Okay, I'm future pacing how I plan to trade Snap today. Now, you can make the argument, but well, look what it did in the afternoon, okay? And that is a great argument. So you want it to be long the stock, you want it to be a buyer of the stock, and then in the afternoon, bam, it finally caught a bid and did exactly what you wanted to, but it didn't meet the criteria. So the next step is, how do you take advantage of that despite the fact that it's not up at that level? And this is where the trade scenarios come in and trade expectations. So how much do I love the trade versus how much do I like it? And how does position sizing factor into how much we love it or how much we like it? Okay, so we're going to zoom back over. This is a 15-minute chart. We're going to actually go now into an hourly chart. So if we go into an hourly chart now, we know that this is the opening price of Snap for this particular day. So if you could visualize what's going on in Snap today, that's what you're going to be looking at. And this period right here, Snap was still below that level. But what we're going to do now is we're going to expand this out a little bit to look at different lines in the sand. So if you can imagine, I'm actually going to make this one blue. If you could imagine now, each hour we are looking for opportunities to trade Snap. So this hour, it was mostly red. This hour, it was mostly red. This hour turned green. So this would be at 12:30. So you're below the opening price, but you're positive for that hour. So remember, this is, you're driving a wide open road, you're driving in stop and go traffic, you open up a little bit, you step on the gas. So in that particular hour, which was the 12:30 to 1:30 hour, it wasn't perfect, but it was still good for that hour. So if you could visualize now today at 12:30, or any day you happen to be trading a stock that you like, you start to filter it out and you set up your watch list that way. You set up your watch list in the sense that, is it positive from yesterday? Is it positive from today? Today meaning today's opening price. Is it positive from the current hour? And you start to stack these pieces of an argument, and then we go back and look at this hour here. This is where, again, like this hour, we'd be looking for buying opportunities, but with less conviction. This hour, we're negative again. This hour, we actually start to wake up and we start to trade again. And once this hour gets back above our short-term line in the sand, which is today's opening price, we can start to consider being a little bit more aggressive. So these are ways to not change your strategy, adapt how you're using your strategy to increase or decrease your conviction levels. So that's how I plan to trade Snap today. So if you can imagine Snap opening today, it's going to meet the first criteria of being positive. Good. Second criteria is going to be, we have the opening price. Now we're going to pay attention to, okay, that's the first trade at 9:30 in the morning. Is it trading above or below that right now? If it's above that, okay, it's still confirming. So the short-term order flow, today's order flow, is confirming the buying that pushed it all the way off the charts up there. So you have from yesterday, you have today, and then you have the current hour. And when you stack those pieces together, you're no longer guessing, and all of the confusion about trading disappears, because now you're just stair-stepping your way into, am I seeing this? Am I seeing this? Am I seeing this? If yes, that means a certain position sizing, which we're going to talk about now. So we're going to hop on over and we're going to take a look at, we're going to start out with a couple of trades. And this, what I promised you here is we're going to now discuss the difference between a trade scan, going into a trade setup, going into an actual trade, and all of those pieces together, how you actually manage the trade. Because you'd be shocked at how much feedback we get about these videos, and people tracking every single trade that I've done or called out. Big difference. Every single trade we've called out or discussed here, and telling me how much money I made or lost on the trade, but having zero idea about how the trade was managed. So I'm going to give you a little bit of an insight, a little bit of a look behind the curtain in what we do in the community. And if you'd like to join us, you'll see I give everything that I'm doing and how I manage the position and how the trade is outlined. If you'd like to learn more about this, absolutely think about spending 30 days with us. It's such a tiny, tiny investment for the long-term career that you'd be investing in yourself. There'll be a link below the video if you want to invest in yourself. So we're going to start out with, discussing a trade in Apple. Now, what I want to point out here is this is the way it looks in our community every day, where and actually this is a big question we get too, is do you give us the actual trade scenario? So yes, I do. I actually walk you through, at the end of the day, there's a game plan video where I talk about the stocks I'm looking at the next day. And then the next day, we narrow that down a little bit more into what you're actually going to see here. So this is a trade. You can see here, this was a trade in Apple. You can see the date here from July 20th. Now, what's important here is this part right here, which is what I discuss all the time. Typically, the orders are, they either go out as a limit order, which meaning price is up here and it needs to trade down there, or we're looking at a stock below that price and it needs to trade up as a buy stop. So as you can see here, Apple trade coming into the week after the strength from last week was one of the top stocks on our watch list. And we had a buy stop in Apple. And you can see that the Apple trade was filled. We have the initial entry, the share size based on, and again, everybody in the community has different share size. So we give everybody suggestions or parameters to consider based on how much they're trading per position. And then they adjust the share size based on how much they're actually risking per trade. Then we have suggestions of how we plan to manage the trade as it moves in our favor. We have the current price. So the current price has to trade up to the buy stop price to get into the position. We have IPT, which is our initial profit target. And you get the whole idea of the trade, right? So what does that mean? That means that a trade that we liked translated into a trade call out, and then the trade call out actually filled. So now I'm going to walk you through a trade from yesterday that was my favorite trade of the day by a mile. Had all of the criteria, including the backstory of the pandemic getting a little bit worse, which unfortunately is a discussion we're having again right now. But these types of stocks, which we were calling, the pandemic stocks, got a really, really big boost last year. Stocks like Wayfair, Etsy, and the one we're going to talk about right now is Peloton. This is what separates trading from you just chasing price action, trading from you are just looking at the top gainers, trading from you're really good at reading charts, but you can't make a dime. This is what separates those. And when I talk about the next losing trade, I'm going to show you that as well. This is what separates those from somebody who sees their account go like this every month. Some days we make money, some days we lose money. Keeping the losses small is the big key. Understanding how to hold those winners, which has been a little bit tough recently with the kind of the back and forth in the market. This is what's going to make you feel like you're the reason you're making money. I just can't express it anyway. So we're going to talk about a trade in Peloton, and we're going to walk on over to the charting end of the chart. We're going to take a look at this. So this is what I posted in our community yesterday, and I'm not going to give all the reasons right now, but Peloton met all of the criteria where it had momentum, it had order flow, everything we were looking at in the right order. But more importantly, that's the first part of the trade where we're building the argument for why we're looking at Peloton in the first place. But it also had a lower risk profile. We didn't have to take that much risk on the trade. It also had what we call room to go, which means that there's sufficient, if not really awesome profit potential if it catches a bid and heads in that direction. So the interesting part here was I literally said yesterday, this is one of my best trade ideas of the day. I really can't wait for this trade. So I'm gonna pull up the trade and show you what the trade call out looked like. So this is the trade call out in Peloton. And you can see it was from yesterday. So I'm filming this right now on July 23rd. So this is yesterday. This is the part that we give here, okay? Decent resistance here. Breakout should lead to a bigger move. Because of resistance, I'm using half position size. But look at the price, 127.50. Okay, now I can't express this strongly enough. We're giving the reasons, we're giving the position management, we're giving why the position management, but just as importantly, we give the entry price that only if it gets to that level, that means it's moving in my favor, confirming my short-term idea about the trade, and half share size to enter the trade. If it breaks that resistance, we're going to look for, as we outlined here, areas to add the trade, looking for an initial profit target. So why am I excited to show you this trade? It's because the trade never filled. And that's the part of trading that a lot of people just are missing. It's kind of like that last piece where every trade idea doesn't necessarily become a trade unless it meets that strict criteria. We also put in there position sizing, which was why we didn't go in with full share size, how we plan to manage the trade. And if we take a look at the Peloton chart from yesterday, okay, so you'll see this is what you just looked at on that chart. It met all the criteria that we're looking for. If you can see, look at all the room it has to go. Pretty big level here. As I outlined, if we get through there, we're going to make sure it proves to stay there. We're going to have lower share size. And then if we go to what Peloton did yesterday and zoom out, that's what Peloton did yesterday. Peloton, which I went into the day as my favorite trade of the day, never triggered. It never gave me an entry at the price that I wanted to. It opened lower, continued to push lower, and didn't fill. So that's real trading. So we get a lot of questions in the morning about, just give me the one idea that's definitely going up today. That's not real trading. Real trading is having your game plan, going on a treasure hunt at night, which we do every day. And I give everybody the game plan video at night so they can absorb it and see which stocks match your personal criteria. And then the next day when the market opens, you have specific levels and position sizing and all of that kind of stuff. And if the trades work out, great, you manage the trades. If they don't, you manage the trades accordingly, like I'm going to show you the next trade. And this is a scenario where I really hope that you could learn from me that just running scans, just running leaderboards, which stocks were the biggest gains yesterday, reading chat rooms, going on to Reddit, that's not trading. That's getting ready to trade. What we just discussed and what I just showed you are real world examples of a trade that followed through. It's still a profitable trade this morning, a trade that we never got in. And so it's not even on the table anymore. So I'm reevaluating whether I even want to be in that stock or not. And we get a lot of questions. And actually, it's a good question as well. We get a lot of questions about, well, if you like it above that level, why don't you just get in now? Well, again, as I talk about every day in our game plan meetings, I don't want to fight the price where sellers keep knocking it down. We get that. Well, if you like it at 20, why don't you like it at 17? Why don't you just buy it now early? Because sellers smacked it down at that level, smacked it down at that level, smacked it down at that level. I'm like, okay, sellers got control of the stock. I want to get through that level before I'm involved with the stock. So we're going to finish up with one more trade that we called out about a week and a half ago. And you might remember the trade because we did a video on it. And it's this stock right now that is getting hammered right now. It's actually down 50%. Now, if you watch a lot of what we do, we spend a lot of time watching price action and volume and putting those pieces together or tape reading. So one of the things we noticed is this massive increase in volume in TAL. And the way that we discuss the trade is there's still bearish order flow. The stock has not started to move to the upside, but something's changing in the stock. And we outlined all of this. And we said that we like the fact that volume is dramatically increasing. We like the fact that it's now going sideways with that dramatic increase in volume. So we're going to take a first piece of a trade if it hits a certain level, and we're going to work the order in 3 pieces. Okay, I want to be very specific about that. The whole trade was lined up, and I'll post this in the community. You go over to the community chat, I'll actually post the trade call out and the date of the call out and how we looked at the trade. So 22.50, if I believe, was the price. We're like, okay, riskier trade, not the same type of order flow trade that moves in our favor. Now, we outlined all of this. This is what I'm inspiring you to do in your trading. And if you're not, get involved with us. It's 30 days of doing this every single day. So we put the trade on, we called out the trade, but we were adamant that we were only looking at 1/3 of our intended position size because the bullish order flow, that is bullish accumulation, has not stepped up and started to bounce to the upside. So we got filled on the first piece, had a reasonable stop loss in only on 1/3 of our position sizing. The stock traded down. Actually, it bounced higher the first or second day. Selling came back in. We got stopped out. Again, a very small loss in exchange for what could have been a very big trade. Got out of the trade, did not meet the criteria again. So we started to look at other trade. We set a price level where we would consider it again, but we're out of the trade, small loss, and now the stock's down 50%. Why am I telling you this? Number one, that was a real trade. Number two, the trade management is the most important part of the trade. The expectation for follow through. How obvious is the order flow? Well, the order flow is bearish into accumulation, into bullish accumulation. But that bullish accumulation, the smart money did not have to start paying higher prices in a meaningful way yet, because there were still shares available, still being sold. So like, okay, I'll take them. Okay, I'll take them. But because we recognized that, we had a smaller piece on the trade. We took a loss on the trade, and now the stock's down 50%, and we're not in it because we followed all rules. So for everybody out there who says, I don't trade with stop losses, I don't need stop losses, trades always come back, this could be a dangerous position for you, because $20 stock, it's easier for people to get size. You size up in your position, easy to have 1,000 shares of this stock, blow your stop loss and blow up your account. You'd be down $10,000 this morning because you did not manage the trade properly, did not have the position sizing properly, did not take the loss when the trade clearly wasn't working. And if you moved your stop loss, move your stop loss, move your stop loss, you're taking a massive hit this week on that particular trade if you're still in it with size and if you blew your stop. So what we're talking about today is the difference between being a chart reader and acting like a professional trader. And I'm not even talking about quitting your job. I'm talking about taking it seriously. I know that's the goal for all of us, right? You just want to sit in front of, in your third bedroom in your house and be a professional trader. And that's a worthy goal. But all of this stuff is this is where the magic happens. The magic happens in assessing trades, managing position sizing, sticking to your discipline on the downside, sticking to your discipline on the upside. So I thought it was kind of cool at the end of the week right now. It happens to be Friday, to discuss some trades, how we assess the trades. For everybody out there who sent me those spreadsheets of every trade I put on this year, thank you for being that passionate. But I wanted to show you the difference between a trade we discuss, a trade that fills, we lost money, and how that trade worked out, and why it's so critical to accept your loss on a trade. And then if you like it again, you can always set it another buy stop and get back into that position. So I hope you enjoyed this video, because this was a really, really big deep dive into what it actually means to be a trader versus you just, let me just go see what's up the most overnight, I'm going to buy it. So we gave you the tape reading levels and a very small, tiny piece of what we do on the tape reading side about how we're going to look at Snap today, and walked you through a couple of other trades today too. So please do me a favor. If you found this stuff helpful, definitely click down and subscribe and hit the alert button. And if you made it all the way to the end of the video, I hope that I provided value. Click down and smash that like button. I'd really appreciate it. So have an awesome day. Be better today than you ever imagined. And I want you to know how much I appreciate you being here today. Thank you so much. Take care now.